We got another uncomfortably hot inflation report this morning that led to a stunning day on Wall Street. The report showed consumer prices jumped 0.4% last month, more than expected. And overall prices up from then 8% from a year ago. Over the same period, core prices rose 6.6%. That's the biggest increase in core prices in 40 years. Economists typically prefer core inflation as a measure because it doesn't include volatile goods like food and gas. At first, today's report rattled investors. Stocks opened way down, and then the markets made a dramatic comeback. The Dow rose more than 1,500 points from its morning low and ended the day up more than 800. Similar story with the S&P. It jumped 2.6%, snapping a six-day losing streak. And the NASDAQ also up more than 2%. Andrew Ross Sorkin's with us, Squawk Box co-host. Andrew, previous inflation reports that ran hot tanked the market. Not today. What gives?
I spent the day on the telephone with traders across Wall Street trying to understand what gives, and I think a lot of them still have their own questions about what really gives. There is a sense, if you want to be optimistic about it, that perhaps when you look at that inflation report, this is the height. This is the peak, if you will, of where those prices are, and we're going to see those prices come down and come down quickly. At least that's appears to be what the hope is. That's also mixed with this. We are going to be getting earnings from a number of big banks that's going to start tomorrow. We've already started to see some earnings come in, and all of them actually look rather good. Most CEOs you talk to today say that actually their business is actually quite good today. They worry about what's coming next. The big question is, what does Jay Powell at the Federal Reserve think of all of this? And for that, I will tell you, most don't think that he's going to change course. And for that, it's hard to really understand why we ended up the way we did today.
I wondered if Great Britain had anything to do with it, with their political reversal and maybe political changes coming.
Well, there's no question, and you raised the right issue, that there is a view that maybe the UK is going to get out of the problems that they've had, at least bring back some semblance of credibility around their own markets. And I think that did play a role in this, but I don't think that played the complete role in where we ended the day. The question, of course, is where we'll end the week tomorrow.
Yeah, last inflation report, obviously, before the November elections. Politically, this has got to be damaging for Democrats.
It's very damaging unless the market continues to move the way it is now. However, I think most people on Wall Street are looking at this. And look, a lot of people want to look at this not glass half empty, but glass half full. But to the extent that the Federal Reserve is going to have to make a decision about what to do you continue to raise interest rates? Given those numbers, you likely do. Has the market already pulled back a lot? It has. But you put those two things together and, well, we need to have another conversation in a couple weeks, Jeff.
I heard you ask this morning, does this mean 100 basis points? I was like, whoa, Sorkin, slow down.
We'll see.
Yeah, I guess we will. Andrew, see you in the morning. Thanks very much.